Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, October the 28th. The year's 2021. Let's talk trading. What not to do, part 4 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, you got a funny story to tell the traders what not to do.
Yeah, it's funny how that worked out, isn't it? But you were looking at your charts, paying attention to what you wanted to do, and I really wasn't. I was looking at other things, and you said, "Hey, I'm going long here," and I said, "Okay, I'll join you," and I did, and I never looked at the chart. And it's like I looked at, and then I looked at the chart and said, "Oh crap! I would never would have gone along here. What the heck am I thinking?" You know, because you and I, we trade a little bit different. You know, we see the charts a little bit differently from each other, and and we both do okay with that. But it's that learned lesson there. And the good thing for me was I said that was not what I should have done, and so I just scratched the trade. I just got out and took a couple pip loss and say that's just learning experience. Not, that's what not to do.
Yeah, so tell the traders some other things that you have on your not to do list, because like I said, you didn't even know that was the topic.
My biggest one, and I did this one today too. Sometimes I get distracted. So if you're going to trade, trade. If you're going to do research, do research. Don't do both. That's probably for me the biggest. For me personally, that's the biggest one, because the reality is that I don't care how good a multitasker you think you are. Things move way too close for you, or too fast for you to try to be doing too many things at once. Shut her down and just do what you got to do, And it was funny. I was talking to a trader last night. I was on the phone with him for a little bit. I was talking about how I really like to go and trade when I'm talking about things that got absolutely nothing to do with trading. Like when I sit on the phone with you and we'll be BSing about stupid stuff. Sometimes for me that's the best trading I have, because I'm not getting distracted by things that just don't matter. The only thing that matters is price, and by being distracted away from the other things and just paying attention to price and talking about things that just don't matter, but just on a whatever jovial type level, I'm able to trade pretty well. So what not to do? Don't get yourself distracted, and find ways to go and take yourself away from the distraction.
Yeah, now one of the things I told the traders was, because, one of the things I like to study is how the brain works and thinking and that kind of stuff is that you have to give your brain a positive suggestion. So even though we're talking about what not to do, the positive suggestion is stay focused, focus on what you're doing, as opposed to saying don't get distracted.
Right. Yeah, and exactly right. And that is a very important thing there. I'm glad you brought that up, because when you start thinking about things that are down and whatever, that can really mess you up, because your brain starts going and being your worst enemy, because you say, "Oh, I'm a loser. All I do is lose. Oh man, look at that. Hey, I'm gonna take this trade here and lose it too." And then what do? You take the trade and you lose it. And it's not because I don't believe in that your mind can go and force the market go and do what it's going to do. But what you're going to do is you're going to wind up not paying attention to what's going on, and you're going to wind up taking those bad trades. You may even take some good trades, and then you don't get out of them when you should get out of them, and it'll burn you that way, so you got to be really careful with that.
Yeah, so is there anything else that you can advise the traders what not to do?
Yeah, don't go into it unprepared. And there's a couple of things with that. One, the first thing is that if you're a statistics trader, make sure you've done your homework and you've done your statistics. You looked at your statistics, and I'll tell you this: it's I admitted to you the other day that I hadn't looked at the frequency distribution for the pound dollar in a while. I kind of knew what it was just by paying attention to the market, but I didn't look at the statistics. And you were gracious enough to go and run that for me, which was wonderful. And it actually matched up to what I thought it was going to be. But you know what? You can get yourself into a lot of trouble if you just go and fly it by the seat of your pants, so to speak. So don't do that. That's just asking for trouble. The second thing is, if you're the type of person where you get up in the morning to go trade and you're groggy, you can't do anything until your first cup of coffee, maybe even run around the block and get some exercise in, then run around the block, get some exercise in. Do what you got to do to get yourself prepared. Make sure that you've read your trading plan if that's part of your routine. Make sure you've gone and if you're using My Notes, put your My Notes up on the chart so you can see where everything's at, know where you're at, so that before you pull the trigger on that first trade, you're ready to do it. Be prepared. I know you had an expression that I know you did some videos, like prepping type videos in the past. I forget what the phrase exactly that you used. It was something along the lines of if you fail to prepare, you're prepared to lose, or something like that.
Yeah, if you fail to prepare, you're preparing to fail.
Yeah, and it's absolutely true, So why are we going to go and prepare to fail? We need to prepare to win. So, put yourself, and that's a don't. Don't not go and prepare. Be ready. Sit down. When you sit down in a chair, close your door if that's what you got to do, family around you, whatever. If there's distractions, like my dog sometimes goes nuts. And I know, Kiara, you've seen that happen on the phone. And what do? I get up and throw the dog outside, so that way he doesn't bother me,
Yeah.
But you got to be ready.
Yeah. And I think one of the things, because I had a couple more things on my list about, what not to do. And one of them is hopping around. So you don't hop around systems, or you don't hop around, pairs or whatever instruments you're trading, and you don't hop around with indicators.
Yeah, exactly. Yeah, I would agree with that. The biggest thing that people do is, now I'll admit that I've gone from different systems to different things like that, and even while I've been successful, but it's more of because, okay, I've recognized a market change. Okay, and because of a market change, I need to go and do things slightly differently than I used to do it. That's acceptable. But hopping around because you're saying, hey, this doesn't work, I'm going to look for the next, piece of, sliced bread that works, and that's never works out well, and that's where you get into trouble.
Yeah, Walmal, explain market change, just in case there's some traders that aren't familiar with that.
Sure. If we go back a year or so ago, for the most part, we saw the pound, for instance, range across usually about 100 pips every single day. There were some days that were under 100, and they would go down to 80. And that's it. That's as low as they would go. But for the most part, they were almost always above 100. Well, now we go and look at things, and it's sort of like, if we get an 80 day, we think it's a great day, a big day. And so the market's changed. Another part of that is when you ran that frequency distribution, a year ago, we would see 5, 6, 7 hours that were above 30 pip range for the hour. When you ran that, we only saw one. And it's like, man, that's a big difference. That's a huge change in the way that the market moved, and so for that reason, it's sort of like, we need to go and approach trading maybe a little bit differently than we used to, and just realize that, hey, this is just, we're in a different market than we were before. So, I've talked about this in some previous videos with you, and the fact that in the old days, I go and try to get 10 pips on every Walmal trade. I don't do that anymore. Why? Because the likelihood of it happening is pretty small. You even look at today's trade. Yeah, this current hour, we got 29 pips for this hour. Okay. Last hour was 19 pips. The hour before that was 10, then 19, 24, and 26. Well, the problem is that if you go and try to get 10 pips of that, unless you're getting 30 pips, you got to remember that the hour, generally speaking, runs in one direction, and then it runs in the other direction. If it started out in the middle, you've already chewed up, 15, 20 pips of that range, and you're only going to get 4 more pips for the hour. So it doesn't work out well. So what do you have to do? Well, in that situation, you say, hey, I'm going to take my Walmart trades, but I'm no longer looking for 10 pips on it. I'm looking for it until price stops. And once price stops, I'm getting out. So if I'm up 3, 4, 5 pips and price stops, get out, and that's just what I've been doing. And, maybe a way to put it, it's scalping Walmal. I don't know. I'm just making that up on the fly, but I'm not trying to get the big 10 pipper anymore because under the current market condition, it's not working. So we need to go and do something else.
Yeah, because that's what happened to me today. I guess full disclosure, I had taken a long trade on the pound around 37.51. and it dropped. And so I was underwater, what, 20 pips, I think. And then it came back. But the problem is, I had an opportunity to take 2 pips twice. And it was one of those things where I'm doing something a slight bit different. I'm changing up the entry time frame. I'm using M30. I'm looking at a longer duration because I'm seeing how you can see these big pips. So for example, this hour, had you gotten in below 30, you'd be up, 20 pips plus right now. So, that's what I was looking at. But, I made the mistake of sitting there thinking, hey, this is going to run. But it did run. It just didn't run my direction.
And that's and the important thing is, there's another don't in there in the middle of that too, and that is that, because of the lot size that you're using, your account size, you can let the trade go 20 pips against you, and you're not happy about it, but it's not going to go and prevent you from playing again tomorrow, and so the don't in all that is that, have you done proper risk management? And said, if I run 20 pips against me, I'm out of the game. Well, you know what? Good grief. Don't do that. It's sort of like what I did, when I realized that I got into that trade poorly, I'm taking my 2 or 3 pip loss by the time I paid, commission and everything. It's sort of like, just take the loss, and, come back and the next trade, I think I made 10 pips on the next trade, and that's just how you have to look at it. So the don't and all that is, make sure you're managing your money properly, make sure you're managing your risk properly, because the problem is so many of us, you're going, the trader last night said it, said it best, because we were talking about this a little bit, and he said it best. Otherwise, you got to go back to your significant other and say, honey, I need more money for the account.
And just so you know, it's top of the hour, so I've got the Walmart chart up for the traders out there. And the one thing I think you just mentioned, that the failing to wait. So you have to tell yourself to be patient, wait for the opportunity, wait for the setup, and just sit on your hands until that happens.
Yeah. You've got, reality is in Forex, we get 24 hours to trade in, okay? The reality is we could probably only trade 5 or 6 before we're too exhausted doing it. But you got 5 hours. You don't have to take every opportunity that hits the table. You have to go and take you should be taking making sure, and the thing actually I said, you should be taking every opportunity that hits the table, but you shouldn't be going and manufacturing opportunities, going and jumping in what we like to call airball trades. No, that's not a good idea. Wait for the trade to come, and when the trade comes, make sure you take it.
Easier said than done, right?
Oh, it is absolutely. Your fingers get itchy, and that's the thing. You get really itchy about it, and you don't realize, what you're doing. By the way, I jumped in just now onto that Walmal trade, and I'm up 3 pips, and I'm just getting out right now because I don't know what it's going to do.
Right.
I just don't trust this market right now. We just had big news come through, and quote unquote, it was positive for the U.S. overall, and yet look at the market; it's the dollar's getting weaker. So that's the crazy times we live in right now.
Yeah.
So this thing may go all the way up to 3,800, or it may drop all the way to 3,700. I don't want to be on the bleeding edge of that knife. I'll just take my 3 pips.
Yeah, see, I'm kind of kicking myself because I had that other trade. I think I was in around 40 or 41. Yep. And it now just crossed the 60 line, so it went from my launch pad into Walmal's 60 zone. I don't know if you don't have a name. What did you call it? The Twilight Zone or something? But hey, you know what? We're out of time here. So fellow traders, I hope that helps. So just remember, when you're trading, it's not what you trade, it's how you trade it. So go out there and train the banks. This is the Rumpled One, over and out.